Welcome to another episode of Dividend Dive, the podcast where we explore the world of stocks, investments, and dividend strategies. We are thrilled to have you here with us today. In this episode, we'll be diving deep into Broadmark Realty Capital Inc., a company that has been making waves in the real estate investment space. So, grab your favorite beverage, settle in, and let's get started. Let's kick things off by getting to know Broadmark Realty Capital Inc., ticker symbol BRMK. This Seattle-based company operates as a specialty real estate finance company, focusing on the construction, development, and acquisition of commercial and multifamily residential properties. Broadmark primarily provides short-term loans to real estate investors and developers, generating income through interest payments and origination fees. With a market capitalization of over $1 billion, Broadmark Realty Capital Inc. is certainly a company worth exploring. Now, let's delve into what many of our listeners are eagerly waiting for, the dividend potential of Broadmark Realty Capital Incorporated. For passive income, Broadmark carries a forward yield of 9.4%. Moreover, its payout ratio is elevated but manageable at 65.63%. Interestingly, Broadmark represents one of the few monthly dividend stocks to buy with analyst coverage. In this case, it's a hold. However, the average price target is $6, implying over 34% upside potential. To gain a better understanding of Broadmark Realty Capital Inc., let's take a closer look at its financial performance. On paper, Broadmark sounds like an incredibly risky investment. With the banking sector flashing red, growth-oriented initiatives don't seem particularly enticing. However, BRMK gained more than 22% of its equity value since the beginning of this year. In fairness, Broadmark is in the middle of a recovery trek. During the past 365 days, BRMK hemorrhaged more than 48%. Therefore, those worried about downside risk shouldn't get involved. On the positive side, the company does feature a relatively decent balance sheet. For instance, its cash-to-debt ratio is 0.52 times, ranking better than 86.55% of the real estate investment trusts industry. Now, keep in mind that I'm not a financial advisor, so it's crucial to conduct your own research and consult with professionals before making any investment decisions. In recent years, Broadmark has shown consistent revenue growth, indicating a healthy business model. Additionally, their loan portfolio has been expanding, suggesting increased opportunities for earnings. Nonetheless, it's essential to consider factors such as market conditions and the overall economic climate when assessing a company's financial performance. Moving on to the market outlook and potential risks associated with Broadmark Realty Capital Incorporated. As with any investment, there are always risks involved. One primary risk factor for Broadmark is its exposure to the real estate market, which can be subject to fluctuations and economic downturns. Its 3-year revenue growth rate is 7.7% below parity. As well, its net margin is deeply in negative territory. Market conditions, interest rates, and regulatory changes can all impact the company's operations and profitability. Therefore, thorough research and risk assessment are critical before considering any investment in Broadmark Realty Capital Inc. We've covered a lot of ground today, exploring Broadmark Realty Capital Inc. and its potential as an investment opportunity. Remember, this podcast is for informational purposes only, and it's important to do your own due diligence before making any investment decisions. If you enjoyed this episode and want to stay up to date with future episodes of Dividend Dive, be sure to click that subscribe button. By subscribing, you won't miss out on any valuable insights and exciting topics we discuss in our upcoming episodes. That wraps up this episode of Dividend Dive. I hope you found our exploration of Broadmark Realty Capital Inc. informative and thought-provoking. As always, we appreciate your continued support and engagement. Until next time, happy investing.
Hey there, before we end, we want to make sure we're transparent with our listeners, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors, and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own, and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comments section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.